Well, the budget is done. The day after the budget sometimes is equally eventful. Good morning. Hello and welcome. You're with us on a fresh new edition of Bazaar Morning Call. I'm Prashant Nair. With me, my colleagues Nigel and Lata is joining us as well. Guys, hi. Good morning.
Good morning, Prashant.
It's going to be an interesting day. Once again, not for just one reason, but at least two or three.
Oh, yes. Three big reasons.
Yeah.
I agree with you.
Let's just get the ball rolling straight off the bat. The big event, I think the new thing which the market is going to respond to this morning is the Fed decision. And I think it's a big one. And I'll tell you why. The 25 basis point perhaps is the only thing which was in line with expectations. The other stuff was kind of out of syllabus. And what do I mean by that? Jerome Powell, the Fed chair, after hiking by 25 basis point and kind of delivering a inline kind of statement broadly in the press conference, did not push back against the market rally. He did not push back against the loosening of financial conditions. And I think this was a big change as compared to the previous couple of meetings where he did that. Markets were expecting that he will say, you guys are rejoicing prematurely. This is still job not done, etc., etc. That did not happen. Point number one. Point number two, Powell mentioned, and I don't know who counted this, I picked this up in terms of the reporters from the Fed, disinflation 10 times in the press conference, right? So, and this is the first time he's seriously talking about the fact that maybe we are in the beginning of the stages of disinflation, which is kind of here to stay. The other thing which he did is he did not kind of argue against the market pricing. The Fed dots as against the market pricing is very different. Market pricing is suggesting that there perhaps will be 1 or 2 rate cuts later this year. He did not argue against that. When asked a question, he said, well, markets have their own perception and we will see. So I think this is what almost the market rallied after that. The price action, the 2% rally on the NASDAQ, etc., followed the press conference, and it kind of almost validated the market's perception that inflation and sort of interest rates are not going to be a problem through the bulk of 2023. The worst of it is perhaps behind us, not ahead of us. Okay, that's one. That's the new thing that I said. The Adani FPO cancellation is the other thing. The withdrawal of the FPO, the money will be, of course, refunded. And this is the one which is drawing a whole lot of opinion, right, out on social media, out everywhere else in terms of what is this going to do for stocks and for the broader market. I think we will find out. But I think one thing is clear, that this is, in a way, an acceptance of the reality of what's happened in the market, right? Just yesterday, the Adani Enterprises stock lost about 1,000 rupees in value. And the difference, the gulf between where the stock was issued in the FPO and where it is now is just too large, right? So in that sense, this is a very logical kind of a move which has come through. Just one more thing, for those who are wondering whether this issue is going to continue to fester, etc., we don't know. But I think what we know from previous instances is that the incremental impact of the news flow should come down. You've had 2 days now where the Adani issue has resulted in market selling off in a very sharp way. Will it continue to have the same impact? I don't think so. I think, as newer and newer stuff, and you can be sure that we will continue to hear reporting on the story, the incremental aggregate impact on the market will continue to come off. So that's point number two. Just a quick bit on the market itself. Yesterday, of course, was a big swing, 600 points on the Nifty, 2,500 points on the Bank Nifty. The Nifty got to the 20-day moving average. That is how high the Nifty went, and then sold off almost exactly from there. The 20-day as of yesterday's close stands at 17,296, right? I mean, if you start to get a bit of an up move, 17,296 perhaps becomes a resistance. On the way down, yesterday's low is 17,353. That is, I think, to be defended. And then the 200 days also around there, 17,300. I mean, almost we got to those levels and then kind of bounced. This is a simple 200-day. Unlike the Nifty, the Bank Nifty did not make a fresh low. That is important and that is interesting as well. So on the way down, 39,419 is the kind of level which I think should hold, hopefully should hold. And on the way up for the Bank Nifty as well, actually the Bank Nifty kissed the 20-day yesterday and exactly from that level turned down. And that level is 41,992. So I think for both the Nifty and the Bank Nifty, the recent lows, it's slightly lower for the Nifty as compared to the Bank Nifty, and the 20-day on the upside become crucial to watch out for. But I mean, this week actually, Lata and Nigel, has been so interesting, so rich in terms of at least reporting and opinions, right?
Absolutely. Great to be a reporter. Yes. Now, let me give the other side of all the points that you mentioned.
Yeah.
Okay, two ways of looking at it. It's true that Powell mentioned disinflation 10 times or maybe as many a time as that. But he also said that there is need for more action. Yeah. I mean, there is need for more evidence that inflation is down. Yeah. There was a counter to his statement. And more importantly, in the statement itself, ongoing rate increases are needed. Yeah. We see the need for ongoing. Now, this is not just Powell. This is the entire Fed, FOMC, telling you that ongoing rate increases are needed. I just looked at the CME Fed Watch. There are a reasonable number of people who are expecting one more rate hike. And then perhaps by the end of the year, the number of rate cuts are more than the number of rate hikes. But there is that. However, I take your point that ultimately what is the market's verdict? The market's verdict is that it's bullish. Okay, so we are seeing that green all over the screen, especially in the bond prices. Prices are higher, the yield is below 3.5. Now, likewise, let me come to the budget as well. Okay, for us as well, the budget is going to keep bond yields down. And therefore, there is definitely a positive for the bank nifty. The other side, the negative Q, there's one from the Fed that there are more rate hikes. The other one is on the Adani FPO. We cannot be very sure that all the bad news is over. There is still the MSCI sword hanging over our head, whether the inclusion will be questioned. And now with, once you withdraw the offer, there could be a feeling that the pro-Hindenburg side has something to say because this side has bowed down. So there can be further backlashes. To be sure, there'll be short covering. And in any case, there aren't so many people who own the stock, so perhaps further short selling is tough. But nevertheless, there will be questions. I think in a bit you will be telling us how the Adani bonds have done. So how will he raise money? Indian banks will be afraid to take exposure. If they do, the market may, not like it. And more importantly, how do they raise money even outside? So that may put question marks, and therefore the backlash could continue. We don't know if the market perceives that growth is difficult. And the other negative is we have to remember that the budget has some casualties. While it's a great macro budget, and that's why the bond market was way more jubilant than the stock market, the casualties would be, is there continued pressure on insurance companies? And is there continued pressure on real estate companies? Because the capital gains tax, which could be set off by buying a luxury house, now you can buy only up to 10 crore. So houses above 10 crore could have a problem. There are those negatives we have to contend with. Okay, all right. Before I get to markets, I have just one point on the Adani Enterprises stock. The technical factor out there is that some of those naked shorts, they could be forced to cover out, point number one. The second factor is that book, that subscription book had hedges. Yeah. The trade would be you short in the futures and you hope for allotment in the cash. Now, they are still, in the FPO. Now, they're well in the money, but suddenly that short could become a naked short. So those are the two small points I want to make, whether the Adani Enterprises stock could see a bit of a short covering bounce today. The conversations I had with dealers yesterday night after the announcement was that there could be a short covering Absolutely. Bounce. And these are the two big points on that, the naked shorts and the hedge positions, if any. Okay, let's get to market setup then. The SGX, if we're suggesting, we're likely to start off in the red with a cut of around 100 points. I like this actually, because otherwise the markets are flying away, then it becomes a bit of an issue. Now you're getting a dip. So at lower levels, could there be a case for a short covering bounce? Remember the FIs they bought after a while, they covered some shorts as well. The PCR has moved down to around 0.7. I mean, we've seen in the past, when the PCR moves to 0.65 to 0.7, we do brace for a bit of a bounce out there. And the dollar index is sub $101. Brent crude prices have cooled off close to around $3 overnight. So that as well is good. And the bulls, they're coming to fight at around 17,350 to around 17,400. So that's, the four factors that could play out in case we do have to see a short covering bounce. On the FI part, well, they bought yesterday. And that was, after selling for 7 straight sessions. And this is the largest buy number we have seen since November, November 11th itself. Institutions, as the FI and the DI number together, well, they bought close to 2,300 crores. And that's the best we've seen in the last 40 days. So both those two data points, they take. The FIs in the F&O market, they covered 7,700 short positions. Though the overall short positioning is at around 81%. And after a couple of days of adding 20,000, 25,000 short contracts, they unwound some shorts. So there was a first hint of short covering after many, many days. And it appears on the Nifty Bank at lower levels, there was some short covering bounce. Because yesterday, the open interest out there was down close to around 10%. Let's see whether or not it has more legs on the short covering side.
On the options data, though, 17,700, 17,800 call, they have been getting written very, very aggressively. At the highs of the day, the premium out there was around 100, 150 points odd. So the first level of resistance will come at around 17,800, 17,850. But otherwise, in terms of the overall setup, well, you have support levels that should come up for you as well. And the recent lows on the Nifty and the Nifty Bank, both of them come up for you, and we have defended that mark. On the Nifty, 17,350 to 17,400. On the Nifty Bank, 39,400 to 39,500. So we've got a levels out there. Prashant, that 17,950, there are two levels out there. The 20 and the 100 DMA, both of them coincide there. And that's why we saw a bit of a pullback. But the SGX Nifty, down 100 points. I think at some point of time, there's going to be a short covering bounce that will play out at lower levels today.
Okay. Well, important. Thanks a lot for those levels. Important to note, while you were speaking, ICICI Pru has announced that only 6% of their policies fall in the category of non-unit linked premiums over 5 lakh a year.
Yeah.
Now, in any case, those are retrospective. That will not be impacted. It is prospectively that kind of policies will not be available. So maybe there's APE, annualized premium equivalent, could fall by 6%. Because that is the extent to which they had those premiums in the current year, in FY23. So it would be good if all the insurance companies put it on the record so that this blind selling on fear that there could be a lot of over 5 lakh premium guys will move out. But in any case, I just want to point out again that that's going to be a negative for the bond market. These guys who bought these guaranteed products were buying bonds because, they have to give back a guarantee to the buyers, to the policy holders. So my sense is the bond market will have to take notice of this absence of insurance buying sometime later this year. Okay, with that, let's come back to equities. And the big equity call of the morning comes from Rhythm Desai of Morgan Stanley. He says the sharp increases in capital spending in a year of global uncertainty, a credible fiscal consolidation, no change in capital gains tax regime, and lower than expected market borrowing augur well for stocks. This budget probably means that consensus earnings estimates may need to rise. Morgan Stanley remains 10% ahead of consensus EPS for the BSE sensex. They are overweight on financials, discretionary consumption, and industrials, underweight on global-facing sectors and defensives, except technology.
Well, this is Mahesh Nandurkar of Jefferies, who says that the budget FY24 is a reiteration of the key tenets of the government. A 50 basis point fiscal consolidation for FY24. Proposed adjusted capex growth of 24% came at the cost of only 2% non-capex expenditure growth in a pre-election year. But these things can change during the course of the year, as has happened in FY23. FY23 capex, he points out, growth there was 8% against 14%, which was budgeted. Mahesh says ITC, L&T and capex plays and pipe companies should witness positive impact, while the budget may incrementally be negative for insurance companies and oil marketing companies.
And now we get to money market views. On the rupee, Parul Mittalsana of Standard Chartered Bank says the dollar INR has seen upward pressure last week on account of equity FPI outflows of $2 billion, even as weak dollar limited the up move. She sees the dollar rupee trade in a range of 81.50 to 82.25 per dollar range next week on sustained dollar weakness after the FOMC guidance seen as somewhat dovish. The next event to watch out for is the Reserve Bank Monetary Policy Committee meeting next week, and Parul expects a 25 basis rate hike.
Okay, on the bonds, we've got Parul Mittalsana of Standard Chartered, who says that domestic yields saw downward pressure on positive sentiment from borrowing numbers coming in at the lower end of the market expectation at 15.4 trillion gross and 12.3 trillion net. Global yields have slipped post-FOMC, with guidance seen as data-dependent and somewhat dovish, even as 25 basis point rate hike decision was as expected. She sees the benchmark 10-year yield to trade in the range of between 7.15 to 7.3 this week, with a close watch on the MPC decision. She expects terminal 25 basis point rate hike to 6.5% from the Reserve Bank of India. All right, Richard Harris is now joining us to get us a quick sense of what the globe is looking like and what the setup is from his perspective. He's Chief Executive at Port Shelter Investment Management. Richard, great to have you with us here. Thank you very much. As so often happens, people call the market, people are reluctant to call a turn in the markets, right? the market sometimes is already turned, and then you follow. You call it a bear market rally, and then you slowly say, well, it's a rally, and then you say it's a bull market rally. Are we at that turning point in your assessment, or you still believe this is a bear market rally, which feels a little different because it's supposed to? Your sense?
Well, us analysts have a habit of following the trend, and then when the trend turns, then we follow that trend as well and blame everything else on hindsight. I think at the moment we're still continuing the trend from the last quarter of last year. We had reasonable support in the equity markets last quarter of last year, partly because China started to open. The China story is still around about that moving. There looks as if there's still quite a lot of money around because people are still happy to buy equities, in the main Western market. So we've got some support there. But I think the real conundrum, puzzle, enigma that we have at the moment is the fact that Jay Powell is trying to say that interest rates are going to continue to go up. Yes, they're going up less fast, but they're still going up, and there's no doubt about that. And yet the markets are almost completely ignoring this, preferring to bet on the fact that, well, maybe inflation will come off and maybe the Fed will even cut by the end of the year. So we've got this dichotomy at the moment with, in fact, the market actually fighting the Fed on this one. And we know what happens when it's trying to fight the Fed.
Okay. Richard, good morning and thank you for joining us. I wanted to ask you, what is the India view now? Up until maybe yesterday, we have actually seen probably China being preferred over India. Now, I don't know if you've heard of the Adani saga over here. A massive FPO, follow-on public offer, had to be pulled off after Hindenburg reported, some negatives about the company. Do you think the India valuation story will continue now? I mean, it's overvalued and there are some shares who are super overvalued. Will that continue to plague the India view?
Well, I think it might do. There might be some contagion from Adani, but I think Adani, of course, is a very separate issue, partly because of its size. But in fact, if you think what Hindenburg were doing, it wasn't a difficult hit to try and focus on Adani. I mean, even on the simple fact that the share has done so fantastically well over the last 2-3 years is one indication, when things will go that well, there probably is some downside there, even as a little bit of air comes out of the story. So I think Hindenburg probably did find a mark. I think the issue with Adani looking to put out a share offering right to the top of the market, obviously from the company's point of view, that's great. But it also has risks in terms of the fact that investors may say, well, hold on, let's have a think a minute. It may well be that, the company's looking at putting it out at excessive valuation. So I think it's actually been a perfect storm as far as Hindenburg's concerned. And it's been quite the opposite. An imperfect storm as far as Adani is concerned. And there will be some contagion, I think, into the rest of the Indian market. But I think we also have to look at Adani being a separate issue, certainly in investors' minds.
Putting all that together, Richard, how do you approach the Indian markets? You've told us in the past, tactically, you look to Hang Seng, you look at the Shanghai market as well. But now, post the recent underperformance, your view on the Indian markets?
Well, I think we're at the moment in common with what we're seeing elsewhere is the US market is doing quite well. Therefore, the dollar's coming off a bit, and that's tending to support some of the emerging markets as well. So I think that, while we have some, if you like, good performance in Western markets, we'll also see India pretty well hold in there. I don't really see India being a departure from everything else, or that necessarily will come down as a result of recent events. But I do think that in the very short term, and as you said, I said tactically, China does look like the better bet, if only because it's been such a rotten performer over the last couple of years.
All right. Richard, it's a pleasure speaking with you, and we hope to continue to get your insights regularly. Thank you very much for joining us once again today. Thanks indeed. We'll take a very quick break here. Our list of top stocks to watch. I mean, it's been an aggregate market we've been focused on for, of course, what's transpired. But there are individual stocks which are reporting. This is earnings season as well. So our research team joins in with that on the other side. Stay with us.
cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment,
Gratuity.
and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Welcome back. It's time for the micros now, and the research team is standing by. Let me first get to the most important story of the morning. Nimesh is standing by to fill us up on everything that happened on the Adani Enterprises FPO. Go ahead, Nimesh.
Hi, Tata. So as far as the Adani Enterprise FPO is concerned, the board last night decided to withdraw the entire FPO issue, which was fully subscribed the previous day. Now, the official release very clearly says that given the unprecedented situation and current market volatility, the company aims to protect the investors' interest, and hence they are returning the FPO proceeds and they are withdrawing the FPO. Remember, the stock yesterday fell 30% intraday, and it actually ended 30% lower. And the entire FPO was priced at 3276, and intraday yesterday the stock fell all the way up to 2100 level. So that was the key reason why the board and Gautam Adani decided to withdraw the FPO, and they're returning the money back to the investors. So that's a bit on Adani Enterprises. There was also a separate release on Ambuja Cement and ACC regarding the concerns on pledge shares. For that, they very clearly clarified that none of the shares of ACC or Ambuja are pledged by the promoters. In fact, the promoters have only provided a non-disposable undertaking, and accordingly, there is no need to have any other top-up of shares or top-up of cash with regards to the pledge for ACC and Ambuja. So none of the institutions can sell any shares of these two companies, and there is no technical pledge either on ACC or on Ambuja.
Okay, all right. Thanks a lot for that, Nimesh. Well, Mangalam joins us to tell us about Britannia's numbers. Mangalam, how were they?
Well, irrespective of the way the markets go today, one stock which may have a good day is Britannia, and that's because the margins of the company have been near record high. If you just take a look at the company's revenues, a 17% jump out there, largely in line with what the street was anticipating, but the EBITDA actually jumped by 51%, much ahead of street expectations, and that was largely led by improvement in gross margins. So the margins of the company have come in at 19.5%. The street was working with a number of just around 16.1%. On the bottom line, there was a big exceptional of 375 crores. So, as a result of which the net profit was 932 crores versus expectations of 465 crores. Gross margins of the company up 570 basis points. What does the company attribute this to? They say that this has been on account of their opportunistic buying and moderation in margin improvement. The new business of the company did extremely well, and for the volumes, while the overall volumes grew by just 1% below street expectations, the number of packets sold was higher by 17%. The reason why overall volumes were just 1%, because remember, the biscuits got smaller.
Okay, that's important. Volumes didn't do too well. One could read some, perhaps, tea leaves of urban and rural demand not being that strong. Okay, Rima Ashok Leyland, she's standing in, of course, for Sonia.
Well, Ashok Leyland has actually reported a good set of earnings. The revenue growth is at 63%. Margins have expanded to 8.8%, which compares with 3.8% a year ago. And that's driving the company to report a profit of 363 crore. So earnings are very strong. On January sales, the total sales are also looking up, 23% growth on a year-on-year basis. And it's driven by a combination of strong MHCV and LCV sales. So going with green for Ashok Leyland today.
Okay, all right. Thanks a lot for that, Rima. Well, Abhishek joins us to tell us about IDFC and IDFC First Bank. Abhishek, they've declared a dividend. They're also putting more money in IDFC First Bank. What's your take?
Well, Nigel, to begin with, IDFC Limited had received a sum for the stake that they sold in their AMC business, which is about 4,000 crore. So from this, they are now going to give a dividend of about 1,760 crores, which is about 11 rupees per share in terms of the translation. So company will also invest about 2,200 crore in IDFC First Bank. So remember that they have a stake of about 36.38%. They can take it to up to about 40%. So there is a gap of about 3.62%, for which they will infuse about 2,200 crores. Back to you.
Okay, thanks a lot for that. Rima, we're getting back to you. There are some more auto sales numbers of January that we are getting in.
Yes, so let me start with Hero MotoCorp, where the sales were a miss. Sales have declined by 6.3% on a year-on-year basis. And for the month of January, the sales have come in at 3.56 lakh units, which is sub 4 lakh for the third consecutive month. But on the flip side, Eicher Motors has reported a good set of Royal Enfield numbers. Year-on-year, Royal Enfield sales up 27%, and month-on-month, there is an expansion or growth of 9.2%. So looking good for the Royal Enfield sales, which should do well for Eicher Motors today. Back to you.
Sonal also joins us. Sonal, tell us about Tata Chemicals. How were those set of numbers?
Well, they were decent, Nigel. Slightly lower than Kotak estimates, but nothing to complain about, at least in the overall numbers. There was weakness in the specialty business this time around. So revenues are up 32% on a YY basis, EBITDA up 69%, margins at 22.2% versus an estimate of 23.9%. Profits also are up 27% on a YY basis. However, they declined on a quarter-on-quarter basis by 37%. That is because they had a loss on one of their joint ventures versus profit in the quarter gone by. The basic chemistry business did well. Revenues were up 42% YOY, 17% sequentially. EBIT margins also up 150 basis points at 21.4%. However, it was the specialty business that saw some headwinds. So revenues were down 32% sequentially. EBIT margins, they declined 700 basis points on a quarter-on-quarter basis. The company says, yes, there were headwinds with respect to raw material prices, but now they have stabilized.
Okay, thanks a lot for that. And some more stocks that we have to watch from Ekta, Ajanta Pharma in particular, Ekta.
Yes, thanks for that. Well, for Ajanta Pharma, it was a mixed set of numbers, but I think it's the margins which will weigh down. So the revenue was up 16%. India was a strong growth of around 13-odd%. US was up 61% year-on-year, but the margins came down to 17% versus 28.6% year-on-year and versus 21% on a Q-on-Q basis. Profit was dragged down because of that, so it was down 13% on a year-on-year basis. Margins will equal to possibly red on the stock for Ajanta Pharma. UTI AMC, revenue down 32% Q-on-Q. Operating profit before tax was down 60%. Margins also depleted for the company this quarter, and the profit was down sharply on a Q-on-Q basis. Mutual fund yields came down to around 0.49%, so possibly a bit of red on that one as well this morning.
Yeah, well, possible, Ekta, but actually on the flip side, the gainers from those who would have invested in the insurance products could be the mutual funds. Yeah. On a rebound, they would perhaps invest in mutual funds. Okay, but now for the big cues coming from the commodity space, Manisha Gupta joins in. Manisha, are you watching the fall in crude price?
I am, yes. And the dollar falling to a 9-month low clearly has been supportive for various commodities. And that's the reason we've seen a bit of a turnaround come in for the crude as well right now. But yes, after 3% of a decline overnight, 0.5 to 1% of gain is what we are looking at in the markets. This is because higher than expected U.S. inventories build-up is what we saw at 4.14 million. Markets were anticipating a number of 500,000 onto this one. Also, the OPEC and allies meeting, which was yesterday, has kept the crude production steady. And then the markets are showing December and Jan as high Russia crude export numbers, even as the sanctions were put on, and that continues to keep the prices under pressure here. So it's just about holding $83 per barrel into the international markets there. But it's a big gain that we've seen in the metal sector. So the precious metal prices have run up. Gold prices have surged past $1,950 per ounce. You have the Indian gold prices, which are hitting at an all-time high, and the industrial metal prices also are on a gain. So whether you look at aluminum prices, which are trading at an 8-month high, copper is back at 7-month highs, nickel has surged above $30,000 per ton. So that's a May 2022 high as well. So the base metals and the precious metal prices really are the gainers for the day.
All right. Thank you very much. A good list of gainers as well there, Manisha. We have to take a break, but thereafter, fasten your seatbelts. We have with us one of the most intelligent, interesting investors and commentators on the Indian market. Samir Arora.
It's another big day after the budget. 30 minutes to go for the pre-open session. Lata mentioned introduced Samir before we took that break as intelligent and a close watcher.
Most
also
entertaining investor.
Exactly. I was kind of that. One of the most witty people and, conveys deep things in a witty way. And that's always fun. Samir, great to have you with us here. Samir, of course, needs no introduction, founder and fund manager at Helios. Samir, we have to, of course, we'll come to the budget, etc. But how are you? What's your latest view on how the Adani situation is unfolding? The new thing is that the FPO has been pulled out. Your sense?
Actually, if you had not reminded me, I would have forgotten that
Samir,
we had a budget.
I think you're on mute.
I think you're on mute, Samir.
No, I'm not on mute. I am not on mute.
Oh,
We
no,
can hear you, Samir.
Okay.
Great news.
Okay, I'm saying if you had not reminded me, I would have forgotten that we had a budget also. So the thing is that I think that, the Adani has been poorly.
I think there's...
coming?
No, the audio is coming and going. Continue, Samir. We'll...
Okay, I was saying that I think they've been very poorly advised because you can't bulldoze your way into the market. So when the stock had fallen on last Friday, I thought that on Monday they will reduce the price by some 10% or whatever is allowed so that the incoming investor has some rationale to say that, I'm buying it after the price has been...
Can we, Samir, sorry, we can't hear you.
Samir,
We lost
why
the
don't we
audio there.
hold
We really
on?
want to actually hear what you...
I'm coming again.
Yeah. We'll just dial again. We'll just connect again. And then we'll come back to you.
Maybe that's a good excuse to fill us in on how the Adani bonds performed, Prashant.
Yeah, they fell again. I picked up the data from Bloomberg, which is the story that they've put out. So they're saying basically that bonds issued by both Adani Ports and Adani Green Energy are the ones which have fallen the most in global secondary trading overnight. I don't know if you have the graphics ready. We should... Okay, I think, what we'll do is I just put that out. I don't know if you have Nimesh with us which we can go across to. Okay, I think Nimesh is going to be joining us to the studio in just a bit. But that's the story, right, Lata?
Okay, do we have Samir with us? Okay.
I can hear you, but can you hear me?
Yeah.
Fabulous.
Samir, we are able to hear you now, and I think we can go ahead.
It's like this gulf we're saying, can you hear us? Samir is saying, can you hear us? But somehow the
All right,
connection is not being
Samir,
made.
just wanted to ask you, how may the markets continue to react to the Adani
So
saga?
I was saying that the mistake that the Adanis made, which is poor advice from their investment bankers, I guess...
We can't hear you, Samir. This is, I think, an issue on our end. Welcome back. Samir Arora is with us, fund manager at Helios. Samir, we were talking about the entire Adani saga. With the FPO being pulled out, what is your view right now on the situation?
So just to let the background, my thinking is that the management was poorly advised in trying to, in a sense, ram in the FPO at the original price. After last Sunday, my expectation was that they would cut the price by some whatever, 7, 8, 10%. And that would have allowed people who anyway believe in that Adani group or the Indian funds or whoever to have applied. But when you have a clear difference of 10, 15% between the traded price and the FPO price, obviously it could not be rammed through. So I think today it's not such a bad deal to have cancelled it from their point of view. We own Gujarat Abuja, which we think is a separate asset, and we bought it only on Monday, by the way, and very easy to sell in theory if there was any liquidity issue. But big picture, we have all got involved because the banks have exposure, but we really don't believe that they don't have enough assets. The valuation or the high valuation was on the equity markets rather than to say that they can't, refinance their bonds or whatever. In any case, whatever stuff they have put out shows that they don't even have major bond repayment or any bond repayment this year. It's some 2-odd billion for the whole group in 24. So as of now, obviously the market will be down today, tomorrow, or maybe today, or maybe half day. But I think the event is in some sense over. But they have to explain.
Okay. Samir, yeah, good to hear that actually. I don't think liquidity or solvency issues are a worry now. Everyone, as you say, and nor are there any worries about the bank's overexposure in India. But will this linger in the foreign mind as already India's valuations are high, and then there are these pockets of overvaluation which are not properly regulated? Do we get some decrease in our valuations because of this image?
These are, if the market goes up, they will justify or we will justify. But before that, if you saw yesterday, Credit Suisse put out whatever news that they will not fund their high net worth clients or whoever buying these bonds at a margin. But I called 3 other banks. In fact, I'm thinking of buying one of those bonds personally because you make some 20% in less than a year. But the point is that nobody else is either restricting or they are even giving leverage. So I think that was more to do with Credit Suisse not being able to handle any more of any mishaps because they themselves have been involved in many issues in the last. So their own risk appetite is near zero, I would say. But at least 3 other banks have told me that not only you can buy, but they will give the same margin as before. So, but that came in the middle of the market, created another round of crisis. Now, talking about foreign investors leaving India, I mean, you look at it. Let's look at this, my favorite new purchase, which is exactly 2 days old, which is Ambuja. So Ambuja was just bought in a, you can say, leverage transaction or whatever transaction, funded by 5 or 6 foreign banks. And does anybody believe that if the stock price falls from the original acquisition price, which is say 385 or whatever it was, that suddenly after 2 days, one of those 6 guys will be trying to sell his part of the shares on the screen? I mean, what a ridiculous thing for anybody to think that if the consortium of these banks own 60-70% of the company, they will just sell and one of them will come and sell it on the screen. And we know that at that time when this acquisition happened, 2 other bidders, which was Ultratech and I think JSW and all were also willing to buy. And so in theory, if you need liquidity, you can after 1 year, 6 months, 9 months, sell it to the next guy if so required. But to say, oh my God, there's a margin, there is selling. So if you also see on the other stocks in which we don't have interest in all the Adani Energy, I mean that other, whatever, green and all. But if you see the amount of this margin exposure is very, very low.
No.
What I'm saying that the foreign investor is a panicky fellow. Last month he was panicking out of China. This month he might be panicking out. He goofed up there. In October they said it is very bad. I still think China is much worse. But let them do it for 3 days, 5 days, 10 days here or there. I don't think changes anything. Our budget was overall very good. So maybe it takes 3-4 days more or 2 days more, according to me, even by second half today, who knows, that you will say this Adani group is not pulling down any bank or making any big this thing. Maybe their stock prices have to correct more or less, I don't know. But we move on. And all I want is that my Gujarat Mucha be okay and my banks be okay first. And secondly, of course, that nobody should bleed to death.
Okay. But Samir, overall, therefore, what are the attractive pockets? Now that the market is a good 1,000 points off its highs of October, what's attractive in India? Would you buy insurance in the first place? One of the big budget casualties.
Insurance, we also have HDFC Life. We'll have to take a call today, or whenever our analysts decide. But broadly speaking, rest of it, I thought we are set. If you looked at the budget, then, the consumer, although they didn't get straight benefit, but there was some marginal benefit. In fact, there's one big story which nobody is talking. I don't know whether it's real or not, but which came in Hindu Business Line, that the gift city-based guys can offer P-notes with 0 capital gains to foreign investors. Imagine if that happened, which currently even Singapore and Mauritius don't have that benefit. Yeah. So there are things which we don't even realize right now. And also in the consumer sector, although there was no explicit benefit, but the fact that this is an election year means that a lot of billions of dollars will be spent in the campaigns by 540 into maybe 3 candidates per location. I mean, per constituency into maybe they spend $2 million each or whatever. So the amount of money that will come into the consumer sector will also not be bad. And then there were no negatives. So that itself is a positive. There was fiscal consolidation. There was a bit of this thing on focus on capex. So everything in the budget was broadly fine, other than maybe this insurance thing, which is restricted to one or two stocks.
Yeah.
So that can't be the cause for anybody to feel too bad.
Samir, just coming back to you, just to kind of come back on the Adani sort of issue. So Bernstein has written a report on the pledge share declaration, and Nimesh is here with us in the studio. Nimesh, what are they saying?
Yes, Prashant. So, after the Adani FPO getting withdrawn, Bernstein has put out a note and they've looked at the scenario not only for the bonds but also for the promoter pledge shares. Now, as far as the promoter pledge share is concerned, the scenario analysis what they've done, they've looked at three different categories. One is as of 31st of March 2020, which was a pre-COVID kind of levels, and that was the pledge level of the promoter at that point in time. Then on the 31st of December 2022, which is officially disclosed data from the group. And third, the implied pledge required to gross up as of 1st of February, which is yesterday, when the stock price collapsed 30, 20, and 15%. So if you look at as far as the Adani Green is concerned, let's look at the first stock. As of 31st of March 2020, the promoter pledge percentage of promoter holding was 13%. That fell to 4% as of December 2022, and with the stock price falling now, it is now inched up to 8%. That's the overall as far as Adani Green is concerned. The second stock is Adani Power. As far as Adani Power is concerned, Bernstein had no data as of 2020, but as of December 2022, the pledge would have been 25%. That is now inched up to 39% as far as Adani Power is concerned. As far as Adani Transmission is concerned, it was just 7% as of December 2022. After the stock price falling, that would now inch up to 11%. Same is the case with Adani Enterprise as well. Look at Adani Enterprise, because that's been a big talking point. As of 31st of 2020, March 2020, the promoter pledge was as 50%. That fell to almost 3% in December 2022, and now that is inched up to 5%. Similar is the case with Port as well. From 50%, it has fallen now to 17%, and now it has gone up to 30%. So, that's the scenario analysis that Bernstein has put out, that because of the sharp fall in the stock price, there has been a bit of an uptick in the implied pledge shares as far as promoter is concerned at the promoter level.
Okay, all right. Thanks a lot for that, Nimesh.
1 minute. The last, Nimesh, that's the implied equivalent pledge required.
Required as of yesterday's close, given because the stock price which has fallen. So, because the stock price has fallen sharply, if there was 8% which was pledged, that 8% has gone up to 13%. In case of Port, if it was 17%, now it has gone up to 30%. So, incremental, either they have to pay up the money or give more shares as pledge. Okay. That's what it implies for.
Let's actually take it to Samir. Samir, this is the latest which Bernstein has put out, which Nimesh explained. Any thoughts?
That's what I was saying. I'd seen this in the morning. Basically, if you see Adani Port has 30% at the yesterday's price,
exactly.
Which means it has to fall another 50, 60, 70% before anybody should feel that the pledge has become so high that all the shares are gone or something. There's a massive buffer in this. That is why I don't think that this is a big issue.
Okay, all right. Samir, just hold on to that thought. Let's also listen to what Mr. Gautam Adani had to say on the withdrawal of the FPO.
After a fully subscribed FPO, yesterday's decision of his withdrawal would have surprised many. But considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. For me, the interest of my investor is paramount and everything is secondary. Hence, to insulate the investors from potential losses, we have withdrawn the FPO. This decision will not have any impact on our existing operations as well as our future plans. We will continue to focus on timely executions and delivery of projects. The fundamentals of our company are very strong. Our balance sheet is healthy and assets robust. Once the market stabilizes, we will review our capital market strategy.
Okay, so we will revisit the story, of course, throughout the day. But let's take more advantage of Sameer's views. Sameer, now let's come back to the budget. And as you pointed out, the improvement in macros, the fact that Indian yields are set to go lower since the borrowing program is not very high. Does it make financials more attractive? What do you find attractive in the Indian market?
So actually, till a few days ago, we always were saying that we like financials and consumer, and we were thinking that we don't like IT. And the budget obviously did not have the IT in any way, but now the margin, it had the other two, this thing. But right now, my number one prediction idea, which I would love to buy every day, except that's controversial, is Ambuja, because I know that at 385, the management bought it. And at that time, there were other bidders. And during this 1 year, if you've added value by, saving on power or logistics or coal handling or whatever else is needed in a cement company where the wholesale guys may not have, worked on it, that the easiest thing is to get back minimum the price which the management paid, and the stocks are in a block. So
Sameer, yeah, we got your point on Ambuja. Why don't you tell us what else?
I'm saying it has changed my thinking. I never buy cement in my life. I'm still not buying cement. I'm buying an event in this case. But broadly speaking, what I mean is I will still be in the financials, and this thing, of course, my financials have also got hit like State Bank. And therefore, our first effort is that are we absolutely sure that there is not really any, maybe there's some small piddly tail risk, who can say, but broadly, there is no risk. And that will take some time, but broadly, we are going to buy the same. Why should we, if we have to buy new things, we have to only look at stocks that are down more than 10-15% this year. There's no point in buying stocks which are up 10%, thinking that, now let's move to something else. So we will continue with our same two preferences out of our three normal preferences, which is IT, consumer, and financials. Right now, is mostly financials and consumer.
Right. Sameer...
By the way, just one line. I'm not talking about Ambuja. Ambuja is a sign of Adani. Adani is a sign of the banks. The whole thing is a sign of my market. So if you think that the FIs have to come back broadly, they have to buy into the whole package of everything is beyond the fall. I mean, in the sense, that doesn't mean they have to rebound, but that a major crisis is 90% or 95%, and whatever percent out of the way.
Yeah, and we've seen, Sameer, previously also, in previous instances also, incrementally, I mean, the market stops reacting with the same intensity to the same news flow, right? I mean, the broader market kind of does move on.
So that is why, you have to give credit to people like me who have survived for 25 years. And we say to survive is to win. Because people get blown off, burnt out, can't take it anymore, can't sleep, can't watch Netflix. Of course, I also couldn't watch Netflix for the previous 20 years because there was no Netflix.
Said with a straight face, huh? Sameer, no, I want to ask you about what's happening in the US. Do you think we are starting a fresh leg higher in the US? That the problems of higher inflation, etc., are now problems of last year, and there also incrementally the market will keep going up.
Are we starting a bullish cycle?
Yeah.
So there, my thinking is, because we have a fund there and it's up to 9-10% already this year because it has all these beaten up tech stocks. But broadly speaking, I think that they cannot go at this pace. This is their relief rally because their interest rates are still high and will remain high and will be increased by another 25 to 50 basis points. So it will be higher for longer. Normally, the rallies in the past happened when there was a cut, because that rule came, not rule, but this thing came, don't fight the Fed and all that. So it came because of a long history of not fighting the Fed. And today, I think these days, this month and whatever may happen for the next few days is more a relief rally that, okay, now the end is somewhat visible. But there will be no cut, and the rates will be 5% for at least 9-10 months, and the bonds and all are even more. And so I don't think that they will have a runaway rally. We don't mind it, but I don't think they'll have.
Okay. Coming back to India itself, what other than financials? You said you buy IT.
No, I'm saying normally we have these three sectors that we like, which is financials, consumer, and IT.
Okay.
These days, we mostly concentrate on financials and consumer.
Okay. Samir, from the financial pack, you've mentioned SBI. The other couple of banks that you would like, given that we've seen such a big correction.
They are not affected.
Yeah.
We have the same HDFC Bank, ICICI Bank. I'm saying they haven't hurt me this month. SBI, because yesterday it fell a lot, also gets involved with the same big picture, this thing on Adani or whatever.
And from the IT pack, I mean, at these levels, you've seen a big relief rally, but there's obviously that fear of a slowdown in the US.
We don't have it. We never thought it'll outperform the way it did this year. But now we are not going to have it for at least 3-4 months. And we'll see how it goes. Right now, our bet was, which hasn't worked in Jan because the US IT did well, so the Indian IT did well. And on a day like yesterday, when on the margin, the benefit should have gone to financials and consumer, it again came back to IT saying, oh, defensive and good corporate governance and, whatever, cash in the bank kind of a thing, which works, but we don't have it right now, so we are not going to buy it now on this basis.
Okay. Well, just a final word. There was one theory that India did very badly in the month of January, year to date, because foreign funds preferred China over India. Is that theme more or less over? Because Chinese stocks also have risen, I believe, a good 70%.
I think that thing was over, but now because of this Adani-related issue, and therefore that issue related to banks, there have been some more selling, I guess. But I don't think that both these will there. So I still feel super bullish for this year, even in our long-short fund. I think we will catch up all this because these things will play out, and you will find that if the people are getting paid on time and everything is happening, or maybe you have to slow down some future growth, but that's okay. In fact, it might bring more discipline to the group and everything, which is not bad, I think. So overall, I am still very bullish. Last year I was not, but this year I am, because that is the main reason. If US is doing well and China is doing well, okay, we can underperform China for some time, which we've also done now for 3-6 months. But doesn't mean we have to be down when the rest of the world is up. We don't have that bad a case for us then.
Got it. Samir, we've been asked to take a break, so let's do that. Thank you so much for joining us. It's always a pleasure. We'll have you back soon again. Thanks indeed. We'll take that break. We're back with the pre-open session in just a bit.